overview. This is now setting up how the plan's going to be constructed. So the client's logo, date business established. Now it's a date business established or to be established.
Mm-hmm.
You've got then customer type. So this customizes the business plan. So does this particular business, if it's a legal firm, maybe they like to call themselves, maybe they like to call their customers clients. If it's a shop, then they might like to call them customers. If they have a range of products and services, maybe they like to call them their customers clients and customers.
Okay.
And then again, what's sold? Do they sell products? With a legal firm, they might say, well, we don't sell products, we sell services. So, okay, they tick the services little thing here. And if they've got a mix of range, then they might tick products and services. So it's just a straight click which option. Not much time needed to be spent in here. Business stage, seed, startup, for example.
Mm-hmm.
Makes sense?
Yep.
Yeah, and if I go down to this little box down below here, you'll see that it says seed, the seed stage of your business life cycle is when your business is just a thought or an idea. Startup is, growth is, so it gives a bit of an explanation. Yeah.
Okay.
And then local currency. Now that just customizes the plan. Sometimes we generate a lot of words in the plan. So when I say we generate a lot of words, the system in the background would generate words around that particular statement. So by selecting the right areas, it then gets to our system does a little bit of work for the client. So
Okay.
they need to be completed. Then we go to the next one, financial structures. Now this is the second hardest question in the whole of the plan.
Okay.
So for example, fiscal year end. So in the USA, the financial year end is it December?
Yeah, they usually do December unless they have a special reason for doing it differently.
Yeah. So
That's usually the default.
you'll see on screen that I've selected the down arrow, and it's got a choices of these are the end of years major countries around the world.
Okay.
So just select 31st of December. Now, the reason why we have a down selector rather than them typing in a date is because people type in all sorts of weird stuff when they put a date in. So we're trying to restrict the errors.
Okay.
Yeah, so it's a
Yep.
restriction of error. Now, based on what the current year is, this then populates as to whether the projected year, so when I say projected year, what year is the first set of financial projections going to be for? Now, if we're sitting, say, for example, if your end of year is December 31, then it's a good chance we're still working in the 2014 as a projected year.
Right.
Yeah.
And what about a business? In this example, I'm going to be doing the plan with this lady in May, but she's actually planning to open her business beginning in, say, September, October of this year.
Yeah, so she might say, okay, let's not worry about the first year. Let's do 2015 as the first projected year.
Okay.
So that way she's got a whole 12 months rather than just 2 or 3 months
All
of a
right.
particular year. So she might put in 2015. And there's some of
Mm-hmm.
the questions that you may need to answer in the room.
Absolutely.
Yeah.
Okay.
So you've got a tax rate, which is what is the, if it's a company, what is generally their tax rate? Australia, it's 30%. If we're lucky, it might go to 29. Now, the depreciation rate, you can put in a base one there. So, for example, if they buy, and I know depreciation rates change, but if you want to just support somebody getting over the hurdle, you might say, okay, let's just do a 5-year depreciation, put in 20%.
Okay.
Yeah. So we're trying not to complicate things because we can complicate things if we want to, but remember we're moving people through, and it can always go backwards. You can always go back to these areas. Now, and
Mm-hmm.
again, the reason why I'm going through this in more depth is because this is the second hardest question.
Okay.
So this one here with your lady that you're looking at with the clothing business, the average days accounts payable. So this is her creditors. So she might say, well, I don't know. So, okay, do you want to pay people when you buy stock in? Do you want to pay people in 7 days, 14 days, 30 days, or yeah?
Mm-hmm.
And she
Mm-hmm.
might say, well, I have to pay on delivery. So, okay, that's 0 days.
Yep.
Yeah, but it could be say a builder who's got a set up with a lumber yard, and they may pay on 30 days, or that's their desire.
Right, and the key there is it's an average because she's going to have to pay her rent every 30 days regardless, and
Yeah,
other things she may have to pay. So it will be an average in there.
yeah. So we might say, okay, well, let's average it at 14 days.
Yep,
Yeah,
probably so.
yeah. So it's just because what happens is we don't want people getting involved with balance sheets and P&Ls and all sorts of stuff. We want the system to do most of the work. So by
Okay.
them estimating what their average days will be, it gives the system the ability to then do a lot more hard work on the system, on the client's behalf. So we
Mm-hmm.
can't not fill this information in; it needs to be filled in. And then we say, and the same thing happens with say average days accounts receivable, which is their debtors. So okay, so the clothing store might be it might be cash, so 0 days, but
Right, I think that would be appropriate.
yeah, she might also, however, want to gain some corporate clients, and just say part of her desire corporate businesses, and offer a facility where she say dresses the corporate females of the each of the businesses, and she proactively engages all the businesses in the community. She may have those people on account.
Mm-hmm.
See, most people just open up a dress shop. But okay, so what if you open up a dress shop, but then offered a facility where then you, rather than sitting around, say on the days that nobody comes into the store, say during the middle of the day, why don't you have a process where you offer a corporate dressing, a corporate makeover dress, blah blah blah, where you go out to all the corporates. Now she may have those people on a account.
Right.
We're thinking outside the box now. But if it was a say it's say it's a what are we looking at here? Say it's I'm trying to law firm. So the law firm may have people on 28 days where they collect their money. Now some law firms may be a combination of put it into the trust account first, so it's 0 days.
Mm-hmm. Mm-hmm.
And then for the lady in the dress shop, what is the value of estimated value of stock that she'll be holding?
Meaning merchandise or inventory, right?
Yeah, correct.
Okay.
Yeah. So what inventory will she have generally as an average? And she okay, I'll put 20,000 inventory in there
Okay.
because what it'll start
And
doing. Yeah, go on.
you project that at cost or retail?
Now projected at whatever her standard is, so it would be cost of inventory, not retail value of inventory.
Yeah, it usually is cost on a balance
Yeah.
sheet.
Yeah. So put in the
Okay.
cost value there. Now the next one, dividends, is okay. If the business makes a profit, what would be a standard dividend you'd want to pay out? Now you'll get some people say, "Well, we're not going to pay dividends." So, well, okay, so you've got to pay yourself out of profit. So you can either leave it in the business, but why don't we see what happens if you pay yourself a dividend? And let's see what the figures look like when we get towards the end of the plan.
Mm-hmm. Mm-hmm.
So these people here, that was a 5% dividend.
Okay.
And the stock days, with regard to the stock days, you can't enter anything in there. It'll do a calculation. So as we populate the plan, this will calculate out. And the cost of goods, you can say, okay, historically, what were the cost of goods? And you say, well, I don't know. So I leave it blank. So the cost of goods here can be left blank.
Okay.
We get a second bite at this cherry as we go through. Okay, so that's pretty much we've gone. So you'll see we're on question number 3. So that's this section now done. That's the hardest
All
it
right.
gets for this particular section. Yep. So then we go down to the little shop. Shop face is about the business.
Okay.
So this is all about the business. So we're trying to build value during the course of this particular section. And when I say build value, you'll see here, okay, so we've got the premises detail. You'll see there's a slider here as well.
Mm-hmm.
So this is because some places may have more than one premises or more than one outlet. So
Okay.
the idea is and you've got to remember that with any business plan, you've got to design it that somebody else is going to be reading it, because a lot of business owners get into their head they're building a business plan for themselves, which is true, but it's only ever one audience that they're thinking about. So we've got to get them to think about, pretend that somebody else is looking at this plan. Pretend at some point over the next 12 months, you may want to take this to a lender. You may want to give it to, say, a high-level employee that you're trying to bring onto the business, and you want to show them key aspects of the business plan. You may want to get suppliers aligned to your business in a more robust way. So you might want to present the business plan to some of your key suppliers. You might want to build alliances with different businesses. So your business plan can be used for all sorts of things. So
Okay.
the person completing the plan or going through this process, they need to understand that it's not just for them. So they've got to construct it so it is for somebody else. So
Mm-hmm.
whenever they're going through this whole process, they've got to be thinking this is for somebody else.
Okay.
So here you'll see premises name. I've got Chermside facilities, and you might say, well, what's it? She's got one location. Okay, so if it's at a shopping outlet, give it that name.
Okay.
Shopping, if it's say Red Rock, there's a shopping centre at Red Rock in Las Vegas.
Mm-hmm.
It might be called the Red Rock Outlet, because in the future she
Okay.
might have another outlet, which is then the Las Vegas Boulevard outlet.
Mm-hmm. Mm-hmm.
Yeah. So the idea is give it a name, give it the address details, and so forth. Because as you'll see, as we're constructing this down, this particular business has a facility at Chermside, which is a suburb. It has also one at Gladstone, so it has two outlets.
Okay.
Yeah. Now, what happens is that you'll see there's a little dustbin and a little cloud next to that item here.
Right.
So when we go down to the second record, which is the second one, the second facility, the same thing appears. So whenever you
Mm-hmm.
see those symbols, the cloud means save it, and the dustbin means delete it.
Okay.
So if I was to press the dustbin now, it would delete that whole premises.
Okay.
And if I was to press the cloud, it would then save that record. Now
Okay.
the reason why you haven't seen the cloud before is because when I go back to button 1, the reason you haven't seen it before is because that's a save straight as we type, because it's just one field.
Right.
When I go into this one here about the premises, it's multiple. It's like the portal into another area of the database. So there's a whole table set up which allows for unlimited number of premises, but it means you have to save each one as you go.
Right. Okay.
Yeah. And generally, when you have then this scenario here where it's a multiple table scenario, you'll then always have a blank one at the end ready for you to enter data, but the blank one never shows up in the plan. That makes
Okay.
sense? Yep.
Yep.
Okay. And you'll see how this builds sequentially. So we've got the premises details in here. Now, when I go to the second question, see how it pulls the premises name over?
Yep.
So now we're looking at the main activities of that premises. So what does that premises do? So this one is the main activities, the head office for Design One Concreting, then an email, telephone number, and so forth.
Mm-hmm.
And now we have a question, do you want to show this on the cover of your business plan?
Okay.
That means, because every business plan has an address details and the name of the business premises and what have you. So this is going to be the main address details on the plan.
All right.
So when I scroll down to the second one, you'll see, so this is the head office for Design One. When I scroll down, the Gladstone facility, this is, I've just put some random text in here, but you'll see that this
Okay.
is not going to show, that's not going to show up on the plan.
All right.
So, for instance, with your dress, if your dress business was more established, she may have a outlet at Red Rock, which is a retail outlet, but then she may have a distribution point in LA that distributes the goods to her 17 other outlets around the country.
Mm-hmm.
So different outlets may have different things. Now, the reason
Okay.
this is important is because what we're doing is when somebody's reading through the business plan, they're going, oh, wow, look at this. They've got a main distribution point in LA and they've got outlets throughout the different countries. So it's building on the business for the reader of that plan.
Okay. Right.
Yep. And now when we go to question 3, we're now starting to build value. So you'll see question 3, plant and equipment. So what plant and equipment is either they have or need to have. So you'll see here that we've got the name of the plant, when they're going to purchase it, are they going to fund it through straight borrowings, which is debt, are they going to give somebody some equity in the business, or are they going to buy it through cash? Or we can do a combination of debt and equity, debt and cash, and so forth. And for some businesses, these may be a guess.
Mm-hmm. Mm-hmm.
And for some businesses, they may not be purchasing any plant. Now, for say a concrete or cement manufacturer, they may be looking at purchasing a new piece of manufacturing equipment sometime within the next 2 years.
Okay. And so that raises an interesting question. What about the build out for leased space? Would that
Okay,
be an
so
appropriate place for this to go? Would be the cost for the build out?
yeah, I'd probably put that. I might put that under capital later, but you could certainly put it. You could put the item name in there. You could put in lease fit out.
Okay.
Purchase date. You put by the what's the date they think they're going to need to pay for that, and the funding method could be it could be cash.
Mm-hmm.
Now, if she's going to inject some capital into the business, then that comes later on. But this is generally this is a machinery side of area, but I'll take you to another area in a minute.
Well, okay. So an example of machinery there might be her POS system, right?
Correct. Yeah.
Okay.
Yeah. So she can put a sales system, purchase date such and such. I'm going to fund it through again debt. I'd imagine she wouldn't be doing it via equity because it's only a small purchase.
Mm-hmm.
And then if she's going to fund it 100% via debt, then she just selects the down arrow, 0 by equity, 0 by cash, for example.
Mm-hmm.
Value of the machinery. If she's going to purchase it by debt, she's going to borrow it over what period? Less than 12 months, 18 months, so forth.
Yeah, that's great.
Yeah, and then what interest rate she's going to do that at, and is she going to depreciate it over a certain period? So the system will also then use these as calculations to calculate the balance sheet.
Yep.
Yep.
Mm-hmm. Good.
So then we go through plant and equipment. We've got a list of registered businesses. So if you can imagine with Action Coach, Brad's got a whole bunch of different businesses registered underneath Action Coach. And again, what that does, you can imagine you might have a business that might hold the IP of the business. So you'd have that registered name there. The main activity would be holds all the intellectual property of the business, including da-da-da-da-da. You might have, registered business could be the trading entity of the business. So you would put those details in here. And again, you'll see that it's a multiple table.
Okay.
Yep. And she might only have one, so she only puts one in there.
Right.
Domain name list. Again, we're trying to add value in the business plan when somebody's reading it. So domain name, it could be her main website, but then she could have a second website which is all about corporate dress and corporate presentation, where she's selling directly to corporates. She might also have a secondary website which is like a squeeze page that's selling particular items online. So she might have some merchandising that she sells online, bangles, belts, scarves, and so forth, which may be a different website. So this is, again, to build what is the website's name and what is the main purpose of that site. Some sites are to generate leads, some sites is to give corporate information about the business. Yep.
Okay, good.
Yep. So then we just go through. So this whole area here is about building value. So we've got domain name list, you've got patents and trademarks. So you'll see here what type of IP is it. You've got a down arrow. Is it a license, a patent, a trademark, or right to operate? So she may have bought into a particular label, but she's got the sole rights to operate within a certain geographical area.
And if there's nothing there, just hit the delete buttons and just leave that
Just
empty?
leave it. No, just leave it empty.
Yeah.
There's
Okay.
nothing, just leave it empty. Same with memberships. When you go to memberships, if she doesn't have any memberships, leave it blank. But of course,
Okay.
you always say here with some of these things here, trademark and patent, you've also got the ability to go down the bottom here and say, okay, so maybe she needs to develop something that's hers. So you would put it in
Okay,
your
down in the
coaching
notes
section.
section.
Yeah. Maybe
Mm-hmm.
she doesn't have, maybe she needs to think about different types of websites, and maybe she needs to then start registering those names. So that would then again go down to the area of what she needs to do.
Right. Okay.
So sometimes with some of this, you might say, okay, so I can understand you've got your main site now, but okay, what happens if you're looking at generating, if you want to generate different areas of business, do you need other sites? So put the name in there and we'll do the main purpose of the site. You might say, okay, the main purpose of the site is to sell merchandising through to the corporate marketplace. And you might put into brackets this area is to be developed over the course of the next 30 days. And then you would put
Mm-hmm.
that down in here in this coaching section.
Okay.
Yep. So we've got the next, whenever you see this sort of thing, this is like a quick diagnostic. So we've gone into foundations, and that's just a choice of 1, 2, and 3 means it's negative, 4, 5, and 6 means it's positive, 1, 2, and 3 means you disagree with the statement, 4, 5, and 6 means you agree with the statement, 1 means you it's very negative or you highly disagree with the statement, whereas a 6 means you do you very much agree with the statement or it's a high positive. So in this first one, clarity of direction. So this is all about clarity of direction. Our vision is clear and understood.
Mm-hmm.
Yeah, our mission is clear and understood. If they had trouble with their mission, putting their mission together, then that might be a 1.
Right.
If they were very clear about the mission and could just bang it out straight away, then that could be a 6.
Mm-hmm.
Yep.
Okay.
Okay, and then the next hardest one is you've got an insurance list. This is just what do you have currently and what do you need, and it's just a drop-down box. And it's just to gauge some
Okay.
idea of what their insurances are. And you'll see a little
Right. Okay.
dustbin and a little cloud next to each one. Yep. Goes down as many as they want to pick. Yep. If they leave it blank,
Okay.
then what will happen in the business plan? It'll say current insurances, this area, and it'll put something like this area has not yet been defined by the owner. Uh, Same with the needed area.
Okay.
So generally, it's a good idea to pick some stuff.
Sure.
Yep. Okay. So the first one is the
Good.
setup. Second one is about the business itself. The third one down is a flag. So just think of a flag as a goal. So you'll see we've got goals.
Okay.
Again, you'll see that it's
Mm-hmm.
an unlimited list of goals. Yeah. So goals and the core,
Okay.
and we've put it into core areas. So direction, goals, money, time, and delivery. So you'll notice that one from the four ways.
Yep.
Yeah.
Good.
When they're going to start date. So when they're going to start that. What's the estimated completion? So we've got your first 13 weeks, which is your first 90 days. And then it breaks into 1 year, 2 years, 3 years, and 5 years.
Okay.
The reason why we don't have 4 is because the first 3 years is pretty critical, and then it just blows out to anything to do with 5 years, pretty much. Priority, important and urgent. So that's the Covey method here.
Mm-hmm.
And then depending on the date, it'll calculate whether it's a milestone or whether it's historical. So what they
Okay.
can do is they can put past achievements in here that are important for somebody to know about when they're reading through the plan.
All right.
Yeah. So you've got your goals. So again, goals, success factors. Success factors are what is going to make this business successful. So, for instance, Boost Juice. I don't know whether you know about the Boost Juice franchise, but the Boost Juice franchise is they have to get a premises within a shopping centre where the rent is below a certain percentage.
Okay.
If the rent goes above a certain percentage, then then they know their franchisees are going to be in trouble. So a key success factor for Boost Juice is high traffic area, rent below a certain amount.
Okay.
So a success factor for your lady could be that she has to get a certain number of customers that have an average value to spend of this to make the business successful.
Mm-hmm. That kind of touches on the notion of break even and that sort of thing, right?
Yeah, could be break even. It might be so a success area for one business could be that they have an exclusive geographical area. Success factor for an accounting firm might be a certain number of active clients. Success
Mm-hmm.
factors for a coach could be that the coach has to have a minimum of X clients at so much. A success factor for a coach could be that they have to have a credible, they have to have a marketing, two or three key areas of marketing that generate X number of leads for them to be, so they know they're going to be successful.
Mm-hmm.
Yep, success factor for an online shopping portal could be that they've got X number of backlinks or they're associated with this particular product. If you're an Apple store, it could be you need a retail outlet with a minimum square footage of X, Y, Z in a high traffic area. So there are going to be some reasons that are key to the success of the business. So this is not a goal. This is what is the core things that have to happen for this business or have to be in place or have to be a norm for the business to be successful.
Okay.
Yep. Then you've got your normal things, success factors. You've got your strengths. Again, any number of strengths they can put in here. Weaknesses, any number of weaknesses. With regards to the weaknesses, so when I've got some weaknesses in here, improve in long-term career prospects and highly required to encourage staff retention, blah, blah, blah. When I go to mitigate, it pulls over the same headings. And then
Okay.
you fill in the mitigate, how to mitigate that area of weakness. Anybody of their worth reading a business plan knows that a business has weaknesses. The key is to identify those.
Right. So you
And then,
definitely don't want to leave that blank.
no. And then the key then is to how you're going to mitigate that weakness. You've got your opportunities. So what are the opportunities in the marketplace? For example, with your lady, the opportunity could be corporate wear because nobody's doing corporate wear in her area, or nobody's doing corporate dress, or how to dress for success, or whatever it is. So that could be an opportunity. So the opportunity could be corporate wear for local business females in the local business community, and then she describes that area. Threats are threats that are happening within the marketplace. So, example, a long time ago when I was working on a plan with car rebuilders, so smash repairs, the government was bringing in a situation where you had to trap it was spray painters of cars. They had to bring in a particular style of trap that trapped all the wash chemicals and so forth. And for a lot